Hey guys, welcome back to another video. Today we'll be taking a look at Procter and Gamble Co. So as always, starting off with the PE ratio, it's currently at a 28.57, which isn't too bad. You ideally want this to be at a 20 or less though. Now, seeing if they offer any dividends, they do. They have a yield of 2.15%, which comes out to about 87 cents per share. It's always nice to see when companies give back to their investors when given the opportunity. Before we look at the income statement, I want to see what the gross margin and return on invested capital is. Right now, the gross margin's at 51%, which is good because you don't want to see this be lower than 20%. Then with the return on invested capital, it's pretty solid at 20% as you want this to be at 7% and above. Getting into the income statement now, we're going to start off with the revenue. So as in the most recent year, they're bringing in 76 billion, which is up roughly 11 billion from 5 years ago. So this is great to see. They have been very consistent with this, so I'm pretty confident this should be sustainable for years to come. Now, with the net income, they seem to be going up and down with this, but the last 2 years has been good, so hopefully they can continue this trend. And the last thing to look at on the income statement is the shares outstanding. So this is something you want to see decrease. The more it goes up, the less your shares are worth. As you can see, it's looking great. Overall, they've managed to bring it down to 2.47 billion from 2.6 billion. Moving into the balance sheet now, I want to start off by looking at their current assets. So their current asset growth doesn't look too good as they brought this down to 23 billion, which is a decrease of 13% from 5 years ago. Now with the current liabilities, as of 2021, they're at 33 billion, which is also not good, of course, because this means they have about 10 billion more current liabilities than current assets. The last and one of the most important aspects to look at in any company is the free cash flow. Cash flow is important because companies that have a lot of money on hand have the advantage of being able to pay off any debt, invest into future growth, or pay dividends. So this is clearly something you need to be improved on year after year. As you can see, it's looking amazing. They haven't had a bad year in a while, and it's only expected for them to keep doing this going into the future. In conclusion, Procter and Gamble is overall a good company. The only thing that worries me is how bad their balance sheet is. They need to have more current assets than current liabilities, or at least be on pace to have more, which they are not. When it comes to buying this stock, the $130 range would probably be the most ideal, since their PE ratio indicates it's a little overbought at the moment. Two things I want to mention before I end the video is my trading strategy is centered around finding value in a company. If I don't see consistent growth in most or all the categories I cover, then I tend to stay away. Secondly, I also want to point out that I am not a financial advisor. I'm just a guy speaking my opinion on stuff on YouTube, so I highly recommend doing more research before coming to the conclusion of buying or selling any stock that I talk about. If you guys have any companies you want me to take a look at, feel free to comment them down below. If you enjoyed the video, feel free to like, comment, and subscribe. Otherwise, thank you guys for watching and have a nice day.